This is a demonstration of problem 429A, preparing financial statements, including a classified balance sheet in report form, preparing and posting closing entries, and preparing a post-closing trial balance. So the problem gives us the adjusted trial balance for Erickson Real Estate Appraisal at June 30th, 2024, and we have the balances for each of our accounts in the adjusted trial balance. And in the first requirement, it asks us to prepare the company's income statement for the year ended June 30th, 2024. So starting with service revenue, we are going to take the information from the adjusted trial balance and complete the income statement. So the income statement starts with service revenue, $48,100, and then as we complete our expenses, we are going to list them in descending order. So our salaries expense was the largest expense, so it will go first at $33,500. Interest expense was next at $8,500. Depreciation expense was $8,200. Our insurance expense was $4,400. Utilities expense $2,700, and our last expense was supplies expense. The spreadsheet has been adding the expenses together, and we have total expenses of $57,600, which, when we subtract from our service revenue, gives us a net loss for the year of $9,500. The next requirement states to prepare the company's statement of retained earnings for the year ended June 30th, 2024. So we're going to get our beginning retained earnings from the adjusted trial balance, and that was $39,500. And we're going to subtract from that our net loss of $9,500, and that gives us a subtotal, and then we need to subtract our dividends. So if we go back to the adjusted trial balance, we see that the dividends were $27,300. So that needs to be subtracted, and that gives us an ending retained earnings of $2,700. Then in part 3, the problem asks us to prepare the classified balance sheet in report form at June 30th, 2024. So I have copied the adjusted trial balance again so that we can get the amounts to complete the balance sheet. So when we do the classified balance sheet, we're going to separate our assets and liabilities into current and long term. So our first current asset is cash, which is $4,600 according to the adjusted trial balance. Accounts receivable is $5,300. Office supplies is $1,500, and prepaid insurance is $1,700. And that gives us a total current assets of $13,100. As we continue down the balance sheet, we see that the company had land of $13,000. They had an original cost of their building of $82,000, and they have accumulated depreciation of $25,200, which the spreadsheet has netted to give us the book value for the building of $56,800, which when we add to the land gives us total property, plant, and equipment of $69,800, which we add to our total current assets of $13,100 to get total assets of $82,900. As we continue down our adjusted trial balance, we see accounts payable was $18,700, and again we're separating our current liabilities from our long-term liabilities. So our next liability is interest payable at $8,500, salaries payable $2,400, and unearned revenue is $7,600, which gives us total current liabilities of $37,200. We only have one long-term liability, which is notes payable, so we will list that, and then the spreadsheet has totaled our liabilities for $77,200. Our common stock, which we take from the adjusted trial balance, was $3,000, but remember we need to use the ending retained earnings that we calculated above, which was $2,700. And so that is the amount we will use for the balance sheet, which is at the end of the year. And that gives us total stockholders' equity of $5,700, which when we add to our liabilities gives us total liabilities and stockholders' equity of $82,900, which equals our total assets. So the balance sheet is completed, and then we're going to scroll back up to the top, and the next thing that we need to do is journalize the closing entries. So we know that after we complete our financial statements, we need to go back and close those temporary accounts to income summary and also dividends and income summary to retained earnings. So again, our service revenue was $48,100. So to close it, we would debit service revenue and we would credit income summary for $48,100. Next, we're going to credit all of our expenses that are on the adjusted trial balance. So our first expense is going to be insurance expense at $4,400. Next expense is salaries expense, which is $33,500. Then our supplies expense is $300. Interest expense is $8,500. Utilities expense is $2,700, and our last expense is depreciation expense building for $8,200. Now we know that our total expenses from the income statement were $57,600, but we could also just add these amounts together. We can see that it's $57,600. Now we know that our expenses exceeded our revenue. So income summary would actually have a debit balance. So to close income summary, we would need to debit retained earnings for the net loss of $9,500 and credit income summary for the same amount. Now income summary will be zero. We also need to debit retained earnings for the $27,300 dividends, and we need to credit dividends for the same amount. And now dividends is also closed. So all of our closing entries are completed, and then the problem asks us in part 5 to open a T account using the balances from the adjusted trial balance and post the closing entries to the T accounts. So I have all of the T accounts opened with the balances from the adjusted trial balance, and now we're just going to post these entries that we just made to the T account. So we had a $48,100 balance in service revenue, and we're going to post the debit to that account, which takes it to zero, and then a credit to income summary for the same amount. And then for each of our expenses, we're going to credit each one of these for the $4,400, so that all of our posting for our closing entries will reduce our expenses to zero. So our expense accounts will be at zero, so they can begin over again accumulating amounts for the next period. So your temporary accounts will always have a zero balance at the beginning of the next period, and we can see that all of these now are zero. They were all credits, and then we would need to post the $57,600 amount to income summary as the debit, and we see that we do have a debit balance in income summary. So to close that, we would credit income summary for $9,500, and we would debit retained earnings for $9,500. But we also need to close our dividends. So to close the dividends, we would credit dividends for $27,300, and we would debit retained earnings for the same amount. And we can see that our ending balance for retained earnings in the T account is $2,700, which is the amount that we had calculated in the statement of retained earnings. Then the last part of the problem is to prepare the post-closing trial balance. So in that, to do that, that's only going to be the permanent accounts, and we're going to take the balances in our T accounts and we're going to list those debits and credits, and that will prove whether our accounts are in balance for the start of the next accounting cycle. So cash was $4,600. Our accounts receivable is $5,300. Office supplies are $1,500. Our prepaid insurance is $1,700. Our land account is $13,000. Our building is $82,000. Our accumulated depreciation is $25,200, and that is a credit. Accounts payable is an $18,700 credit. Interest payable is $8,500. Salaries payable $2,400. Unearned revenue is $7,600. And our notes payable is $40,000. Our common stock is $3,000, and then if you remember, our ending balance in our retained earnings that we just finished was $2,700, and that will be the last entry in the post-closing trial balance. And we can see that we are in balance. Our debits and our credits are both $108,100, and so all of our accounts have been closed. All of our financial statements have been completed, and we have proved that our debits and credits in our permanent accounts do equal. So we are now ready to start the new accounting cycle, and that is the conclusion of the demonstration for problem 429A.